Someone just bet millions that gold is about to crash 40% by 2028. And if they're right, it could change everything for crypto holders like you and me. Here's what's wild. Gold has been the safe haven asset for literally thousands of years. But right now, massive options trades are betting it's going to collapse. We're talking about a drop from around $2,600 an ounce down to $1,500. Why does this matter to you? Because when traditional safe havens shake, money flows somewhere else. And that somewhere could be digital assets, especially ones built for the new financial system. Let me break this down. Options are basically contracts that let you bet on future prices without buying the actual asset. Think of it like insurance. You pay a small premium now for the right to profit if something big happens later. These gold options are what's called puts. They're bets that gold will go down. And the size of these trades? We're talking institutional money, the kind of money that knows something or thinks it knows something. So what would cause gold to crash 40%? Here's the thing. Gold thrives on fear and inflation. When people trust the system, when central banks have things under control, gold loses its shine. These traders might be betting that the Federal Reserve finally gets inflation under control, that the economy stabilizes, and that fear trades unwind. But here's where it gets interesting for crypto. If gold crashes because people trust the system again, where does that leave Bitcoin? Some say Bitcoin is digital gold. If gold falls, does Bitcoin fall too? Maybe not. And this is where Cardano and ISO 20022 come in. ISO 20022 is a new global standard for financial messaging. Think of it as the language banks use to talk to each other. Right now, most banks use an old system from the 1970s called SWIFT. ISO 20022 is the upgrade. It's faster, it handles more data, and it's built for the digital age. But here's the key part. Certain cryptocurrencies were built to be compatible with this new standard from day one. Cardano is one of them. So are XRP, XLM, YieldGeo, and a few others. These aren't just speculative coins. They're positioned to actually plug into the banking system when this transition happens. Why does this matter? Because if gold crashes because people trust traditional finance again, these ISO 20022 tokens could explode. They're the bridge between the old system and the new one. Think about it. Banks aren't going away. Governments aren't going away, but they are upgrading their infrastructure. And when they do, they'll need digital assets that speak their language. Cardano is built for this moment. It's proof of stake, so it's energy efficient. It's got smart contracts, so it can do more than just transfer value. And it's designed with regulatory compliance in mind. For everyday people, this means you could stack a token that's not just a speculation play. It's positioned for actual adoption by institutions. That's a completely different risk profile than meme coins or hype projects. Now back to gold. If those options traders are right, we're looking at a massive shift in how people think about storing value. Gold has been the default for centuries. But maybe that's changing. Maybe the new safe haven isn't a metal you bury in the ground. Maybe it's a digital asset you can send anywhere in seconds. One that banks can actually use. Here's what to watch. First, keep an eye on gold prices through 2028. If that collapse happens, watch where the money flows. Second, track ISO 20022 adoption. More banks announcing pilots or integrations means these tokens are getting real utility. Third, watch Cardano's development. They're rolling out new features and partnerships constantly. If they announce a major bank or institution using their network, that's a signal. And fourth, watch Bitcoin. If gold crashes and Bitcoin holds or rises, that tells you digital assets are decoupling from traditional safe havens. That's huge. The big picture? We might be watching the changing of the guard. Gold dominated for thousands of years because it was scarce, portable, and trusted. Digital assets have all that plus programmability and speed. This is educational content only, not financial advice. Always do your own research before investing. These markets are volatile and you can lose money. But if you're stacking for the long term, understanding these macro shifts matters. It's not just about price predictions. It's about understanding where the world is heading. Follow Stack Daily 60 for daily crypto and money tips.